Yes guys, what is going on? Welcome back to the channel. In today's video, we are going to be continuing the gold 2024 backtesting series. Looking at the data right here, we have around 2 months left to do. We got up to around November 2024. For anybody that's also new to the channel, I'm going to be doing an in-depth walkthrough of the training plan and strategy before we get into the actual backtesting as well. And I'm also going to be leaving this training plan document completely for free in the description below for you guys to check out if you wish. Now, if you can also stay behind until the end of this video, I'm also going to be doing an in-depth walkthrough of all of the analytics behind the strategy to see how it performed over an entire year worth of data. But just real quick, before we get into the backtesting itself, this is the analytics we have so far. So obviously very nice analytics so far. We have around a 66% win rate across a total of 97 trades, and this was over around 11 months worth of data, with an average 2.8 risk to reward ratio using a mechanical 1-to-3 take profit rule essentially. But yeah, as I said, I'll go through the analytics in detail at the end of today's session, but let's not waste any more time. Let's jump over to, first of all, the strategy walkthrough for anybody new, and then the backtesting itself. I'll leave the chapters at the bottom of the screen as well, so you guys can skip through to the backtesting itself if you've already seen the trading plan walkthrough. So let's get right into it. Alright guys, so before we get into the backtesting itself, let's just do a quick rundown of the actual system that we're going to be testing. By the way, I'll leave this trading plan document completely for free in the description below as well for you guys to download if you want to. If you've seen any of my previous backtesting sessions, I'll leave the chapters at the bottom of the screen as well, so you can just go ahead and skip straight to the backtesting itself, because this will just be a repeat of what I mentioned in my previous videos. So step one of the trading plan, getting right into things, is very simply, whenever I come to the charts, I'm going onto the daily and 4-hour time frames just to gauge what the overall market direction and structure is saying. Are we bullish? Are we bearish? And then I'm looking to align myself with this higher time frame narrative. So for example, if price is bullish, I'm only looking to buy, and then vice versa for sells, I'm only looking to sell in a bearish market. Now, obviously, when we come to the daily and 4-hour time frames, this is going to give us that kind of macro perspective on price, whereas price heading longer term. But then we need to break it down to the 4-hour and hourly time frames and the more lower time frames to identify any of the more refined structure, and also draw on any areas in the past where price has mitigated into and any of the previous structure. Now, what I mean by this term previous mitigations is very simply, if we have a look at this diagram right here. So a previous mitigation for me is when, for example, we've seen price pull back, react off a supply zone, and then push away from it. That's all I simply mean by that term, and I'm simply boxing this off just as a reminder and to make it easier to see where price is likely heading going forward based on where it has reacted off in the past. And also crucially, I'm marking on any of the previous structure. So for example here, you can see on my charts the B and the C. B stands for breaker structure, C stands for change of character. So I'm basically marking on previous structure whenever price breaks structure or gives a change of character, right? And this is just going to make it a lot more clear to see what the overall structure is, what the overall trend is, and hence where price is likely heading going forward. This is also a crucial step because it's also going to allow us to more easily identify any points of interest when we come over to step 2. And bringing us to step 2, this is exactly what we're going to be doing. We're identifying essentially any areas where we could see price pull back into and potentially continue that overall trend from. That's all a point of interest is, and that's what we're looking to do in step 2. Now, for myself, I essentially have 2 different types of points of interest that I use. The first one is a classic imbalanced supply or demand area. I'm sure you guys are familiar with that term. So all I'm simply waiting for is for price to essentially retrace into an area of supply if I'm looking for sales, or an area of demand if I'm looking to buy. And the only criteria that I have for these areas is that they need to be a clear area where volume came into the market. And the way we can kind of see that volume came into the market is by identifying some imbalance. So if this area is imbalanced, that validates it as a point of interest. It's also better for me as well if price takes out some liquidity into this area. It makes it slightly higher probability and slightly more likely that you see a reaction from that area and for the overall trend to continue from that area. So for example, if you look at this one, price ended up sweeping some previous highs and some inducement into it and then continued to sell off. This one, there is no liquidity below it, but you can just tell it's a very clear supply zone where a lot of volume came into the market from. So I would consider selling from this area if price were to retrace into it, right? Now, the second type of point of interest that I mentioned is very simply when you just have a higher time frame liquidity area. So for example, if price, for example, up here, pulled back, swept some higher time frame liquidity, if it sweeps higher time frame liquidity and then starts to present an entry, which I'll go through in a moment, how we're going to enter the market, I'm happy to sell or buy from that level if it shows very clear intent on lower time frames. So with that being said, that brings us over to step 3, which is essentially how are we going to actually enter the market? Because, you know, it's one thing to identify these areas, right? But it's not very high probability and it's not really a profitable system to just kind of blindly buy or sell from these levels using the only confluence of a supply or demand level. It's just not very, you know, it's not going to give you an edge in the market. So this is where we come over to step 3. And how I'm looking to enter the market is very simply, once price comes into this point of interest, I'm going over to the M5 chart. Always the M5 time frame, by the way, guys, because this is going to make it a lot more consistent and repeatable. So you're always using the same time frame for entries. And then on the M5, all I'm waiting for is, if we're trying to buy, I'm waiting for the M5 time frame to flip back bullish. If I'm waiting for sells, I'm waiting for the M5 to flip back bearish in line with that higher time frame. So what does this actually look like when we're on the charts? Well, for price to flip back bearish, it needs to create a change of character. So what does this look like? This looks like price breaking the most recent higher low, and then vice versa for buys. So if I'm looking for buys, I'm waiting for the M5 time frame to give a change of character by breaking the most recent lower high. And when we come over to the back testing itself and we go through some chart examples, this will become a lot more clear. So don't worry if that's a little bit confusing at the moment. It will become a lot more clear when we go over to the charts. That's all we're doing on step 3. We're then simply looking to set a limit on the imbalance. So once we see a change of character, right? Once price, so a good example is this one right here. Price has tapped into our higher time frame POI. It's then presented a change of character. It has created an area of imbalance. We are then simply looking to set a limit on the area of supply that was created in this range before the change of character, right? We're placing our stop loss a little bit above the high just to allow a little bit of breathing room and allowing for the possibility that price may want to re-grab this high before going lower. And then step 4, this is where things are becoming a bit more nuanced and some of the more smaller details are coming into play. So, and by the way, guys, if you haven't tried this approach, I highly recommend it. This is something that massively helped my trading and went from me being quite inconsistent with, you know, making 2% one month, 10% the next, -5 the next. It's just helped my trading to become a lot more consistent and the strategy more repeatable. And what I'm referring to here is this mechanical risk to reward approach. So for this strategy and for this backtesting session, we are going to mechanically target a 1 to 3 risk to reward. So whatever the price action is doing to the left, I'm simply looking to set my risk to reward tool at a 1 to 3 and mechanically target a 1 to 3 risk to reward. Why is this beneficial? Well, if you mechanically target the same risk to reward on every single trade, then you know there's no uncertainty creeping in. There's no room for human error. There's no discretion involved. It's just a purely mechanical process that you can follow every single time, and there's no sort of decision fatigue. There's no uncertainty or any of these other factors coming into play. It's just a very simple and mechanical process. And why a 1 to 3 in particular? Well, I've done a lot of testing on this, and over a sample of like 5 years or so, both on live tested data and in back tested data, this was the optimal risk to reward that I personally found, right? So 1 to 3 mechanical risk to reward for the TP. In terms of risk management, for the sake of the back testing, this doesn't really play much of a role, but in the live market and on prop firm accounts, I'm doing 1% risk per trade. I've also included a few more nuanced details about different size prop firm accounts, different combinations of prop firm accounts, live personal accounts, and also some more details about some of the key processes I use, such as trade journaling and also something called ASR, which is like a performance review over a particular period, such as like a weekly performance review that I do at the end of every single week. And in the trading plan here, I've detailed basically how to do that, But for the sake of this video, I'm not going to go through that. You guys can go through it in your own time by downloading the trading plan for free in the description below. That is it for the actual strategy rules, guys. As I said, this will become a lot clearer when we go over to the backtesting itself. So let's go and do that now. Let's head over to the charts and let's get straight into it. All right, guys. So starting off from a completely blank chart, and as always, zooming out to the daily time frame. First of all, starting off on higher time frame and just working our way down to the lower time frames using this sort of top-down approach. So coming over to the charts, what we can see is that kind of prior to this move down, price was overall in this bullish trend. And if we just look on the weekly time frame as well, one thing I always like to do, and one thing I always try to emphasize to the guys inside VIP, is that whenever you have an impulsive and quite intentional pullback like this, ask yourself whether it's likely that price completely reverses from here, or whether this is perhaps just a pullback for higher prices. And given how price was moving before this pullback, just notice how kind of parabolic it was on the weekly and higher time frames, right? So if we're kind of zooming out and seeing the overall context, this could easily just be a retracement for higher prices. And what I've just noticed as well is if we look back on the daily time frame, you can see that price has now taken out a decent amount of previous lows. So we've had this low taken out, obviously kind of a significant higher time frame low. So you can kind of view this in one of two ways. The first one is that this was probably just a sweep of liquidity and this was a pullback for higher prices. Or the second way of viewing this is that this was a change of character, and then price, you could anticipate a pullback for then lower prices and price to create a lower high essentially for more downside. So I'm kind of keeping both of those possibilities in mind. We also do have this next liquidity level. If price took that out, that would be kind of a level that price would likely react from. But as always, not trying to predict anything, just having a few different areas in mind and then reacting to what price shows us by using that lower time frame entry model that I walked through in the trading plan walkthrough. So I'm going to mark this on just to see if price does want to come down into it. Temporarily though, price is still bearish at the moment. Obviously we've still got this clear bearish structure coming in. So how I would basically look to kind of trade this is looking on some of the lower time frames. As I said, we still have that clear bearish structure coming into play, so we could look to sell down towards that liquidity level we've marked. So just marking on some of the lower time frame structure, we have this sort of price action forming. This was the most recent breaker structure. Looking within this range, we do have an area here of imbalanced supply. If price could retrace up into this level, this would be an area I would consider selling from. Selling down to this liquidity level, right, that we've got on the daily time frame, and that we can kind of see prices gravitating towards. So if we just mark that on, and let's see if price starts to pull back for us. Okay, no, so no pullback, but now we have had that liquidity level being taken out. So once again, this is a very clear higher time frame liquidity point that we know price is very likely to react from, because once price takes out those previous lows, it will very often push in the opposite direction, right? So here, an M5 confirmation in this situation would not be enough for me, just because prior to this, you know, you had this very extended downwards move, lots of momentum coming in. So only using the M5 for an entry here would not be high probability in my opinion, and I would at least want to see the 15-minute structure flip back bullish. So let's just play this on. Yep, there we go. So now you've got that 15-minute structure flipping back bullish. Just there. Not really seeing an imbalanced demand yet though, unless price wants to pull all the way back into this area. So once again, a criteria that I always have for my entries is that once we see this shift back bullish, price needs to create a clear area of demand for us to enter from, which has to be imbalanced as well. Okay, so in this case, I would actually enter from this one. The reason I would enter from this one rather than this all the way down here is just kind of considering the momentum. This is all one of the things that I really like to emphasize, is that, you know, when you have clear momentum like this, is it likely price pulls all the way back into the extreme? Probably not. And if it does that, you would kind of anticipate that it's probably back bearish and it's going to take out the lows. So I wouldn't want to enter all the way down there. In this case, I'm just going to set a limit on this 15-minute demand. I'm going to have a slightly more conservative stop loss below these lows, so that way it kind of accounts for the possibility that if price does want to come down here and tap into this imbalance, we're still protected in that case. And yeah, basically not just trying to get a really sniper accurate entry. I don't really care about that. I would rather just be, you know, have a more general entry, increase my win rate slightly, and just have this kind of more consistent and sustainable approach. So I'm going to set this limit and we will see if price can pull back and tag us in. I'm liking the fact now as well that there's not really anything price is reacting from to the left, and you've kind of got this situation whereby, like, if you're looking at this from the perspective of sells, this would be the breaker structure, but within this range, within the current bearish leg on 4 hour, there's not really any clear supply or liquidity for price to tap into. So I'm kind of liking the look of how this is shaping up. I'm going to leave this limit and we'll see if it gets tagged in. There we go. So it's got tagged in. I like here how as well price is moving very slowly and correctively back into the area. One thing that you can kind of anticipate is that when price is moving like this without any like impulsive moves to the downside or without any intent to the downside, it's very often just going to be a correction for higher prices rather than a complete reversal back bearish to the lows, just because price is kind of accumulating liquidity when it's doing this. It's moving sideways, building orders on either side essentially. So this is looking pretty good. If we just play this on, obviously if you did want another confirmation inside this area, you could have waited for that using the M5 time frame. In this case, for a confirmation, I would want to see price. So this is the current lower high. I would want to see this high broken. Asia low has also been taken out now as well. Yeah, so if you wanted to wait for a confirmation, this is what I would be doing. Price is giving you that change of character. It's creating an area here of imbalanced demand. So I would be entering on this area if I missed that initial trade. But because we are already in this initial trade, I'm obviously not going to enter again, because then I would be risking 2% instead of 1%. But yeah, that's kind of what I would be doing with stops below this low. Nice, there we go. So you can see price now starting to shift over to the upside. It has given another breaker structure right here, so that's a good sign that our analysis is playing out. Because it has now also pushed quite a decent amount from the entry, we can begin to look for another entry to kind of skate into this position as well. So let's have a look if basically how price develops from here. Not really seeing anything at the moment. I'm just going to let it develop. Nice, there we go. So TP was hit on that first trade, but price is still showing this clear bullish intent, so we can now look for more entry opportunities essentially. Zooming back out, could now probably see price head towards, you know, when I'm looking at this, I'm basically asking myself, where is the opposing liquidity? And the next opposing liquidity is kind of at these daily highs up here. So maybe we can see a move all the way up into those highs. Obviously not predicting price, just kind of reacting and seeing where it does reverse from. I would mark this on as a new breaker structure as well. So looking in this this current range, we've got between the low and the high, we've got this area of demand. We could maybe see a price pull back into this area. Okay, it doesn't really look like it wants to do that. Moving on, we have, again, not really seeing any other points of interest above that, so I'm just going to play this on a little bit. Actually, yeah, so now we have this one as well, this very clear level of demand. You can see price has just swept some previous lows into it as well, so we just mark that on. So we've got liquidity being taken out into a higher time frame POI. This is when we jump over to the M5 time frame and monitoring for an entry. Currently, I would need to see this lower high broken unless price wants to, for example, and gold does this a lot, where it will make this initial push, sweep the lows one last time, and then give the entry. So I would also monitor for a situation like that. Yep, there we go. So now we need to see this structure broken. Nope, it has now made a new low. So now we need to see this one. And I always wait for a closure above, by the way. A wick above is not enough. So now, as you guys can see, we had a wick out of the lows. Price then gives that change of character. We've got that clear momentum coming in as well. Just look at the volume price created from this area. And then in terms of an actual entry on this, sometimes what I'll do is, if there's no clear demand on the M5, I'll zoom out to the M15 just so I can see price with a little bit more clarity. In this case, if you zoom out to the M15, you can see we have this clear area of demand right here. So this is my entry. I'm going to enter and set a limit on this area. Stops below the low. And again, mechanical 1 to 3 take profit rule. If you guys have missed any of the previous backtesting sessions on gold, you would know that I always use a mechanical 1 to 3 target, which basically just helps to remove any of the discretion and kind of uncertainty in terms of where to target. So I'm going to set my limit here. We'll see if price pulls back into this area. Yep, there we go. So again, very slow and corrective pullback down to the area. That's what we want to see. We didn't want to see it come down with lots of volume. Price is now tagged into this demand. Let's see if it holds. Nice reaction so far. There we go. Price broke structure again. Oh, so it has broken structure, but it does look to be retracing back down. But as always, I don't make my trades break even or take partials. So this one is stop loss or TP essentially. Okay, stop loss in the end on that one. That was a bit annoying. It did run 2.5 R. What I would look for here now is, I wouldn't see this as a reversal. One of the mistakes I see a lot of people making, particularly in the kind of SMC space, is whenever you see something like this, right, where you have price break the higher low, lots of people are quick to jump to the conclusion that this is a reversal and they see this as a change of character. But what I would do, because of the overall bullish context and because price was overall very bullish before this, and because it's not really reacting from anything significant to the left, it hasn't come into a supply, it hasn't swept any higher time frame liquidity or anything like that, I would more so just view this as a sweep of previous liquidity back into this area of demand and look for more buying opportunities essentially, rather than trying to sell, viewing this as a change of character. Obviously though, we still need to see the entry model again. As always, waiting for a confirmation before entering the trade. In this particular case, the current lower high is this one. So if price can close above this, I'm going to enter. This is not enough. Like I said, we need to see a closure above, not just a wick above. Yeah, there we go. So you can see clear closure above that area. Clear amount of volume coming into the market with clear imbalance as well. If we can see a retracement into the demand, entering this trade, I don't think that it, like for example, if we enter market execution here, the risk to reward is kind of ruined because we would have to have stops all the way below these lows. So in a situation like this, I would wait for a retracement. And that's kind of the reason why I wait for the retracement, is just to kind of maximize that risk to reward and to, yeah, basically just increase the risk to reward, which it gives you a better edge in the market. Because if you have a higher risk to reward, you don't have to, target as much, and you also don't have to have as high of a win rate. So let's see if this can retrace for us. At the moment, it's kind of just pushing away. One thing I would also do here is, just kind of read the structure, and if price, for example, creates a new area of demand, like this one it has just created, with some liquidity above, I would enter from this instead. But yeah, it doesn't look like it wants to pull back in that case. So this trade is no longer valid because price has broken the main high just here. So what we can do now is we can just look for a new point of interest. And like I said, lots of people, just imagine how many people here would have been kind of tricked into thinking this was a change of character and trying to sell within this range. But you kind of just got to consider the overall context, right? Because we know price is very bullish, hasn't reacted from anything significant to the left. What is the chance here that price just completely reverses? It's very small, right? So in a situation like this, I would always try to align myself with that trend and only look to buy, seeing this as a sweep rather than as a change of character. Not really seeing any other points of interest here at the moment. So let's just let price develop a bit. I also want to be, like I said, I want to be aware of that liquidity level we have up here. Once price takes out this high, that's kind of when you're thinking maybe the buys are over and price could do a deeper retracement. So I'm just going to mark this on because that's the opposing liquidity we're looking to target and where price is kind of gravitating towards. Doesn't really seem to be pulling back at the moment. Gold is very difficult to trade when it's in scenarios like this, where it's kind of just doing these small retracements, then pushing up and making the next move, because you can't really get an entry on it. Okay, there we go. So we're getting a retracement. Notice where price came into as well. It has come into just below that liquidity level. So how I always kind of think about this and how I kind of mention this to the guys inside VIP is that when you have a previous resistance like this, price will very often react from it and make a small move down. But 9 times out of 10, because a lot of people are trying to sell from this kind of so-called resistance, price will eventually push back up into it and take all of those people out. Also, just looking how bullish price is here, is it a good idea to sell yet? Probably not, because it hasn't really given any reason to do so. It's still overall bullish. So what I would look for here is instead maybe a retracement into this demand and look to buy up into that liquidity. So yeah, this is the next point of interest. Let's see if price can give an entry here. Obviously still waiting for our lower time frame entry model on the M5 time frame as always. So let's have a look how it reacts here. Currently I would need to see a closure above this lower high, which is right here. We only have a wick above at the moment. Okay, cool, there we go. So we've got a closure above. This isn't quite a valid entry for me because there's no imbalanced demand here. So I'm just gonna let price develop a bit first. Okay, so now we have this area of demand. If price can retrace into this, this is a valid trade and I'm going to enter it. So setting my limit here, going for a 1 to 3. We also have a little bit of liquidity resting above this zone as well, which is quite nice, which basically just increases the chance that the trade plays out based on my data. That's what I personally found anyway. This trade is still valid if there's no liquidity above the demand, but the fact that there is liquidity above it just increases the chance that it plays out essentially. So we'll see if this gets tagged in. Obviously this becomes invalid if price breaks this high before pulling back. Yeah, which it has done in this case, so this is no longer valid. And price has also just taken out that daily liquidity level as well, which was this line that we had marked on. So if we just have a look, zoom back out. So obviously at this point in time, price is still very much bullish, right? We're kind of anticipating that this is probably a higher low for price to create a new high by breaking this high. But once this higher time frame liquidity to the left has been taken out, you're kind of then anticipating that you may see a deeper retracement back down to, maybe some of these levels. And all of this structure essentially becomes internal structure for price to come back and take out. So I wouldn't sell from here just yet, but if it can start to shift back bearish with clear intention, I would consider selling from here. So at the moment you can see, right, yeah, there we go. So something like that, that's what you want to see. Once that liquidity was taken out, you can see that clear intention. price selling off with a lot of momentum. We've had that clear shift back bearish. So notice whereas before I was viewing this as a sweep for higher prices rather than as a change of character. And the reasoning behind that, and the reasoning why I'm considering this one to be a change of character instead of a sweep, is kind of two reasons. The first one, you've got that clear momentum, just look at how much volume came in. And number two is where it happened. This change of character happened after the higher time frame liquidity was taken, whereas this one happened just in a random area to the left, which was unlikely to cause a reversal. So I would consider this one to be a valid change of character. And if price can pull back, let's have a look if we've got a supply. So we've got kind of this area at the extreme. If price can pull back up into there, I would consider selling from there. We also have this lower time frame one. With a scenario like this though, because price was overall quite bullish before this move, I would wait for another 5-minute confirmation inside these areas rather than just setting a limit. So let's see how that develops, see if price wants to pull back or not. Okay, no, so it slightly missed our area there. There wasn't really an entry anyway. Right, so now I would kind of, like I said, I'm still viewing this as an overall bullish trend because price has taken out higher time frame lows. On the 4-hour time frame, it has very clearly shifted back bullish. So I'm still seeing this as a potential retracement for higher prices. And what I've seen now is price has taken out this 4-hour demand zone, as you can see right there. So it's retraced into a discount of the current bullish leg, swept some higher time frame lows. So this is why we're kind of looking for more buying opportunities if price does want to present them. In this case, we would need to see price close above the current lower high, which is this one right here, which it has just done, as you guys can see. And in this case, I'm on the M15 just because the M15 and M5 structure is the same. You can see on both the M15 and M5, this is the current lower high. So in this case, we can see we've got this area of imbalanced demand down here. This is why I'm going to set my limit. We've got some liquidity resting above it as well. So lots of confluences aligning on this one. I'm going to set my limit here. And we will see if price can pull back into it. So I'll just mark on this just so it's a bit clearer. This is the liquidity I'm waiting to be taken out. Again, notice how it's kind of moving down very correctively. Left equal highs above, very efficient price action coming down. There we go, so the demand has held. Price has broken structure again. That's obviously a good sign that our analysis is right. Notice as well how also whenever you have a scenario where price sweeps higher time frame liquidity, the demand becomes much more likely to hold. It becomes kind of like a strong low, you could call it, which is kind of protected by price. It very often will hold, and price, you'll see it, won't be able to break past this level if it has taken out some significant higher time frame lows. Just kind of one thing I've observed and seen. So TP was hit on that one, that's nice. We've now also got another breaker structure and a new area of demand. So this is the new POI down here. If price can retrace into this area, I wouldn't just set a limit on it. I would be waiting for another confirmation now. Right, there we go. So price has retraced into it. Jumping over to the M5 and waiting for another confirmation. In this case, I'd need to see this high broken. Or for it to re-grab the lows and then present another entry essentially. Right, so it has broken above it, but this is the Asian session. Yeah, okay, so Asian session just continued to push up and price broke the main high again. So next POI, if we just zoom back out real quick. Yeah, so I'm still viewing this from that bullish perspective. Probably at least taken price up to this high, which is the opposing liquidity. Next POI for me at the moment, maybe if it can retrace down into this sort of area. We'll see though, because it doesn't look like it wants to retrace that far. Yeah, okay, next point of interest, we've got this area of demand. Price has swept some lows into it. And this is also one of a key tip here is whenever you have a scenario like this where price is very bullish and you've got that clear volume coming in, sometimes if you're only on higher time frames such as the 1 hour and you identify a POI like this one, price is very rarely going to pull all the way back down into it, particularly a pair like gold, which kind of just tends to, when it moves in one direction, it really just moves in that direction and doesn't really pull back that much. So one of the tips is, and one of the things that I find massively beneficial is just look for a retracement into a lower time frame POI, which is nearby, rather than anticipating price coming all the way back down here, which it will very rarely do. It could do, and if it does do that, we're prepared for it and we will kind of adapt to price. But if it doesn't, we also have this other scenario that we could see play out as well. So yeah, like in this case, right, we've had price sweep liquidity into that area of demand. We've seen a change of character. Price has also created an area of imbalanced demand. I would consider it this whole area between the wick and the wick. We've got some liquidity resting above it just here. So this is a valid trade. I'm going to set my limit. In this case, there's no reason to have stops below this wick, in my opinion, because if price breaks below this demand, there's nothing stopping it from going to that wick. So just thinking about that logically, I'm happy to have my stops there. I'm going to place the order and we will see how it plays out. Okay, no, so that becomes invalid because price broke the main high, which was this one. Once price creates a new breaker structure, that change of character and limit order essentially becomes invalid for me. And I would now wait for a retracement into a POI plus another confirmation. Okay, cool. So price is now retracing a bit more. Again, though, I wouldn't be quick to jump to the conclusion that this is a change of character. I would more so be viewing this as a sweep for higher prices, given the overall bullish context. Has it tapped into a demand? So we still have this area of demand. I'm just thinking as well, it has kind of, if you're considering this to be a supply zone, it has kind of reacted from it and given a change of character. So in this case, it's a bit conflicting because you could also say that that was a change of character for sells. If I was looking to sell from there, I would wait for a retracement into this, but maybe let's have a look at 5 minute. I'm just going to leave this for the time being and see how it develops. Still have this demand below. Maybe if it can come into the demand and then flip back bullish. Okay, no. So it looks like it's continuing lower. It has come into this lower demand though. This one right here. So kind of adapting to that. You can also see it has swept the previous Asia low into it. And is overall still bullish, I would consider it. So M5 time frame. Oh, this is annoying. This would have been a perfect entry from, to be honest, I would do market execution here because, you know, we've got this change of character. This is our entry model. We've got some imbalance, but in my opinion, the risk to reward is already worth it. So there's no point waiting for a retracement all the way into the demand and trying to get a sniper entry. One thing I personally like to do is just kind of have a more logical entry rather than always trying to be sniper and precise. Because this is the Asian session now, just going to fast forward this. Yeah, there you go. So that was quite annoying. It did play out in the end. So London session opens. I'm looking for another entry opportunity. And what I would be looking for here is if price can continue to push up and form a new POI for us to enter from. In this case, we have this area of demand. So if price can retrace into this, I'm going to set my limit on it. Just here. Stops, I'm going to have a bit conservative below the demand itself. And yeah, we'll set this limit and we'll see if price pulls back. There we go. So price has now pulled back into that area. Let's see how this goes. There we go. Nice. TP hit on that one. Notice how I always have my stop loss a little bit below the demand, because a pair like gold very frequently sweeps the demand itself before making the move. So you just kind of want to have the stop loss in a logical place that actually makes sense, rather than, I see a lot of people having it just below the demand, but for me that doesn't really make any sense, because gold and other pairs as well will very often sweep the demand itself before making the move. So we've got a new breaker structure now. Obviously that area of demand, it gave a small retracement and a small reaction, but it did not really amount to anything, and price has now shown intent back over to the upside. So what I'm looking for is now a pullback to then continue buying. Next POI for me would be this liquidity level right here. The reasoning behind that is because this is the last low before you have this imbalance, which price will very often react from. You've also got all of this momentum. So again, considering this momentum, is it likely price, for example, pulls all the way back down to this demand? Probably not. So you want to ideally look for a more nearby level to potentially buy from. In this case, we have this liquidity. Looking for a confirmation, we would need to see actually on the M15, if it doesn't hold this area, I would consider this demand as well. But yeah, if price can present a confirmation straight from here, I'd have no issue in taking it. Yep, so something like that, that's perfect. We've got a change of character just here. And then the actual demand is this candle. This is the area that created the volume. So if we can see a retracement into this kind of general region, I'm entering on the whole imbalance rather than refining it to this candle, because again, I don't really want to try and get sniper precise entries. I just want to enter the trade if it's valid. So I'm going to set my limit right here, stops below the low. There we go. So we're tagged into that. Let's see how it develops. Okay, nope. So we had a small push away, but price fell to break the high and is now pushing lower. Price has now re-grabbed the low just here. Let's see how it develops. Actually, I would re-enter from here. So what we've had now, sweep of the lows. Price has created an area of imbalanced demand, and it has also given us a change of character again. So I'm going to try and re-enter from here. This would be valid. Stops below the low and going for a 1 to 3 again. Let's see how this plays out. There we go, we're back in. Okay, no, so another loss on that one, that's fine. So next idea for the sells, sorry, for the buys. This area of demand. Okay, no, so price very clearly didn't respect the demand. Let's have a look at where we could see buys from next. Has taken out Asia low. Cool, let's see how it reacts from here. We still have this kind of demand zone. Not really liking how it's reacting to it. So it kind of has come into this extreme demand, swept the low, and we've started to see price shift back bullish from there. See, I'm going to try the buys one more time here if we can get an entry on this. So in this case, actually there's not really anything to enter from. This would be the change of character, obviously. I'm going to let this play out a little bit more just because there's no clear demand that I would enter from here. Kind of just consolidation at the moment. In a situation like this, it's just best to leave it, in my opinion, and just see how it kind of plays out. Okay, so it has now grabbed these lows. You can see price reacting from there. And did actually come into the demand. Still not really anything I would be doing here though, to be honest. Yeah, still kind of just consolidating really. It's best to avoid low probability conditions like this. It's reacting quite nicely from here. Let's have a look. So one thing that gold very typically will do is when you have a situation like this, at some point it comes back, takes out all of the internal lows. So for example, these ones, it's taken out this low, this low, this low. All of these internal lows have now been taken out. And then gold will very typically make the next move up after that. So just having a look at this. If it doesn't hold this area, we could obviously look for price to come to the next zone, which would be kind of like this area of demand all the way down here. But if it can kind of present an entry from here, this would also be valid. So it has kind of made a move in Asian session. I'm just going to let this play out. Actually, that was my bad. I should have entered there. So that was the change of character. Price has retested into the demand. That should have been the entry, but I played price a bit too quickly there. So yeah, we should already be in this trade, but I'm going to look for a new entry. Yeah, there we go. So that trade would have played out perfectly, but I played price a bit too quickly. That was my bad. We've now got a new breaker structure and a new POI. This would be my POI. If price can retrace into it. Looking to target at least this liquidity level. That's kind of the next high that you would expect price to reach for. Right, there we go. So price has retraced into the POI. We also actually have this one. If price doesn't respect this first demand, and then looking to the left as well. Yeah, so this looks pretty good because there's not really much stopping price from heading to this liquidity. So let's have a look inside this demand zone. Nothing just yet. This is the Asian session, so I'm just going to fast forward that. Oh, that's annoying. So that was a perfect entry. In Asian session, we had a change of character. We had then price pull back into the demand. Slightly annoying though. Obviously, here in the UK, Asian session is overnight, so that's why I fast forward it. Yeah, there we go. So price has broken structure again. Slightly annoying we missed the entry just because it happened in the wrong session, but that's fine. We can probably get another opportunity here as well. Cool. As you can see, price just very clearly pushed past that liquidity level. So what we look for now is for price to head up into the next level, which is this high right here. If we zoom out to the daily as well, one thing I've noticed is we do still have an area of daily supply above that high. And like I said at the beginning of this backtesting session, you could still take the perspective that this was a change of character, and then this is just a pullback for price to create a lower high. That is a possibility here. So looking to buy up into that high. Let's have a look. Okay, so price is retraced into the demand. Just here. Overall still bullish. Let's have a look on lower time frame. It's not really a change of character here, so this is not quite valid. Yeah, there's not going to be a valid entry here just because there's no change of character. But yeah, that would have played out very nicely if there had been an entry, but there wasn't. Okay, cool. So now you can see price has swept that daily high into the daily supply zone, right? So either we could view this as a sweep, or you could view it as a breaker structure, and then this is like the bullish leg. So I'm just, it really depends on how price develops. You can see we've had this push away, which broke structure to the downside, and price left behind an area of supply at the top of this range, so this sort of area. In a scenario like this though, I would want to see another confirmation in this area for the sells if price holds the area. Actually, was it? Yeah, I think we over refined it there. You can see price came into the supply, held the supply, broke structure once again to the downside. You can also see, looking to the left, at the very least, where would we expect price to sell into? And you would at least expect price to sell into this previous low. So we can probably look for some sells down into that now. Thought process is we've seen price sweep daily highs into the supply zone. And you could view this as a change of character, right? So let's have a look. If I was looking for sells here, I would need to see a pullback. At the moment, this would be the POI if price can retrace. Below that area at the moment, there's not really anything else. Okay, no, so it doesn't look like price wants to pull back into there, but we've now got a new breaker structure. Okay, so obviously now we've seen price very clearly shift back bearish. We've got this clear bearish structure coming into play. So what we can look for, just looking out to the left, is for price to at least gravitate towards the next liquidity, which is at these two equal lows, or relative equal lows. So that's kind of like a magnet for price. So we can look to short down towards those levels. Next POI for the sells, we have this area of hourly supply. There we go, price has just tapped into it. Asia high has also been taken out into this area, and we could also consider this the most recent breaker structure. So jumping over to the M5, let's see if we can get an entry on this. Yep, there we go. This is perfect. We've now had change of character with an area of imbalanced supply. I would take this whole region. So if we can see price retrace into this, I'm going to enter. I'm going to put stops a little bit above just in case it wants to sweep the supply itself. And as always, mechanical 1 to 3 TP. So let's see how this goes. Let's see if price retraces. Right, there we go. So we're tagged into this now. Nice, there we go. So TP hit on that one, nice and quick. It only took around 2 hours to play out. Cool, so analysis looks to be playing out. We've now had price hold the supply, push away from it. So I'm now thinking that we could see price just sell into the lows. So if I'm looking for another entry here, to be honest, at this point, I'd just be waiting for some more development because there's no clear point of interest. Still not really much going on. Yeah, there we go. So price broke structure again, just here. Now again, just rinse and repeating the same thing. We can wait for a retracement into a new area and then look to continue selling down towards these previous lows. Next POI for me would be this area of supply, which you can see price has just taken out some highs into. So yeah, let's see how it reacts here. See if we can get an entry. Did give a change of character, but there's no imbalance here, so this is not valid for me at the moment. Typically, when you see a change of character, for it to lead to a development down, you want to see it create some volume, which it hasn't really done in this case. And like I said, in this case, you very typically will see price take out the high again, rather than the change of character lead into more downside. So yeah, in this case, this is what I want to see. So you've got very clear volume below the low. Price has now retraced. This should have been the entry, but I played price slightly too quickly. So what I'm going to do instead is kind of just look at this fractal structure, right? We've had price sweep the high, give a change of character here. We've now got this sort of region of supply. So I'm just going to enter on this area instead with a slightly bigger stop just above the supply. Again, just entering on a more general area rather than trying to predict the market to the exact pit and trying to get a sniper entry all the time, which is just completely unnecessary. So we'll place this, in this case, market execution. And like I said, I'm only entering here because I missed the initial entry. The entry should have been here. We should have set a limit on that area after the change of character. So this is kind of like a secondary entry just because we missed the first one. It's not looking good. Oh, okay, nice. There we go. So TP hit on that one for a nice 1 to 3. Cool. So let's keep playing price. It looks like, yeah, so it's just going to break the low. There we go. And has it swept the liquidity yet? Yeah, so now it has swept that higher time frame liquidity. So once again, you can kind of view this in two different ways. You can view this as either this being a change of character, or it could just be a sweep of previous lows into the demand in an overall bullish market, right? Because you could still view this from the perspective that this was a higher time frame change of character after the initial lows got swept back here. And then this was just like a sweep of previous lows for higher prices. So kind of taking that possibility into consideration, I would be monitoring here on lower time frames just to see if price does flip back bullish, particularly after a huge move like this. Obviously everybody's now in sells, everybody's looking to sell. So yeah, there we go. So if you see on M15, it has now given a shift back bullish from the demand after higher time frame equal lows have been taken out. So one thing I always tell the guys inside VIP is when you're using this liquidity approach, you don't have to be right about overall market direction. You can just play the liquidity game and anticipate that once liquidity like this is taken, you're going to see probably at least some reaction, right? Even if price is going to continue lower, which means that you can capitalize on that reaction. And you don't have to be right about overall direction. This is the Asian session, so I'm just going to fast forward it. Cool, so Asian session pushed up. We've already had the change of character. What I would look for here is if price can take out some liquidity and then present an entry for us. Cool, so we've seen that liquidity taken out after the change of character. Let's just have a look how it reacts here. We also have this area of demand. Could definitely see a reaction from there. Yeah, there we go. So that's our change of character. Actually, we didn't get a closure above. I need to see a closure above first. Yeah, there we go. So we've got a closure above. We've got an area of clear imbalance. This is my trade. I'm going to enter from here. And in this case, there's not really any reason to have stops below the low. If it breaks this area, the trade is wrong. So I'm just going to place stops there. And we'll see if this pulls back for us. Yep, there we go. So we're in the trade. I'm going to play this on M15. And we'll see how this goes. So thought process is higher time frame lows have been taken out into this demand. M15 has flipped back bullish. Price has retraced into the demand, giving us an M5 change of character. So all time frames have realigned. And it has created an area of imbalanced demand as well. So let's see how this goes. Nice. Once again, gold sweeps the demand, doesn't really respect it, but because we had a good stop loss placement, we're still in this trade, right? And that's one of the things that I always like to do. Let's have a look. Can this continue? Yeah, nice. There we go. So lovely trade. Very close to stop loss, but again, good stop loss placement, putting it in a logical place, allowed us to stay in the trade. Nice one. So let's have a look. What can we look for now? Because we've now seen that change of character, demand has held, price has broken structure once again, just here. I'm now thinking that we could probably just see the buys come back into play. Again, I'm still like considering the possibility of sells here. So how I would look to trade a scenario like this is just basically reacting to what price shows me. If it shows me sells, I'll take the sells. If it shows me buys, I'll present the buys. But looking out, if we were looking for sells, the next level I would consider would probably be like looking at daily time frame. This next liquidity level, which is, you can see that last wick before the imbalance. So if price can take this out and gives a change of character, I would be happy to enter from there. But we can also now look to buy up into it, viewing price as bullish essentially. So next point of interest for the longs, maybe this area of demand we've got here. Right, there we go. So price has retraced into it. We've seen a sweep of the lows into the demand. Let's just fast forward the Asian session. Okay, no. So we missed the trade during Asian session. That's fine. We've now had another break of structure. Next POI, we have maybe this area. Right, price has retraced into it. There's no confirmation there though, so that's not a valid trade. Okay, cool. So price has come back down. Again, I wouldn't see this as a change of character. I would just see this as a sweep for potential higher prices. Again, the reasoning behind that is because it hasn't really reacted from anything significant. Maybe we could see it retrace a bit lower into the demand. But yeah, I would be viewing this more so as a sweep rather than as a reversal. So I'm just going to keep this marked on and we'll look for an entry here. Right, there we go. So price has started to flip back bullish. We've got an area of imbalanced demand. And where did this happen? This happened after... Actually, yeah, to be honest, I would want to see this come a bit lower just because it has induced that demand at the moment. So yeah, I wouldn't be entering anything here until at least the demand is tapped. Okay, no. So you can see price did end up inducing the demand, but we have now seen it break higher. So obviously it doesn't look like it wants to come all the way back down there. So we can look at a new point of interest now. Maybe if this low is taken out. Actually no, so I would still consider, like we've got this demand which is induced, we've got some liquidity resting above it. If this liquidity is taken into the demand, I would enter from here. Obviously with another confirmation. Yeah, there we go. So demand has been tapped. All of these lows have been taken out. Let's now jump over to the M5. Okay, so the demand didn't hold, but price, notice how it came slightly lower than the demand. After it came lower than the demand and swept the demand, we've had a break of structure to the upside. We've got an area of clear imbalanced demand. So I would enter from this. This is a completely valid trade for me. Again, the reasoning behind that, even though the demand wasn't respected, we have had the demand taken out, which, if anything, makes the trade higher probability. It doesn't look like it wants to retrace though. I'm going to keep the limit for now. Okay, nope. So obviously price doesn't look to want to come back to there. So next entry point, now that we've had a 15-minute change of character, I would look to enter from this area instead. So I'm going to set my limit on here. Like that. Have stops just below those lows and go for 1 to 3 again. There we go. So we're tagged into that. Let's see how this goes. Cool. So I think that actually ends the session, guys. So you notice it won't let me play anymore. That's because we've completed the entire 2024 year. So before we end this session today, let me just take you through some of the analytics that we've had. So if we go to this session right here. So over the course of 1 year's worth of data, we took 107 trades. So that's an average of 2 trades per week. Like I always try to emphasize as well, you don't need to take that many trades to make a lot of money. Like in this case, we made 164% across a 66% win rate, and we only took 2 trades in the whole week. So it's much better to basically look for the highest probability trades rather than trying to trade every single day and kind of firing off, on every single opportunity. Just wait for the higher probability ones, and I guarantee you will see very good results like this. Obviously, we used the mechanical 1 to 3. It's a bit less because I think it takes into account commissions and stuff like that. The max loss streak we had was 4 trades in a row. So drawdown management with this was very good. Obviously, if you're trading prop firm accounts, this is good because it's not going to blow the maximum loss of 8 to 10 trades depending on the firm. I'll let you guys go through some of these more detailed analytics in your own time. I'll just scroll through them for you guys if you want to pause it anywhere. So yeah, guys, that concludes the 2024 gold backtesting series. I hope you will find some value in this series. If you did, make sure to like and subscribe to the channel. And if you have missed any of the previous parts of the backtesting series, watch this one next. And also let me know which pairs we should backtest on the channel in future videos, and I'll do a new series on that. Thank you guys all for watching. I hope you will have a great rest of the day, and I'll see you guys in the next video.